Hi everyone, this is Paul Lang with Disciplined Trading Strategies with this week's Trade of the Week video. This is for the week ending 7/22. The stock was MTG, the date was 7/18, which I believe was a Thursday. The strategy was based on a Tier 2 gap. For the entry, let's take a look at the charts because it's a little bit too much to write in that little area. I leave myself there. And the management was advanced reward to risk 2.8 to 1, but that's over two plays. There were two different and unique plays, one in the morning and one in the afternoon. I also would like to ask you if you have any interest in day trading. If you're day trading curious, please hang around to the last slide. I have a couple of comments for you. Also, people accuse me of never giving enough notice to remind them of events. Coming up Friday, August 3rd, that's a ways away yet, is the Introduction to Mastering Technical Analysis class. Everyone is invited to this. You just have to be a member. So if you're listening to this and you're not a member at DTS, make sure to go to the homepage and you'll figure out how to become a member. It's free. It's just a matter of being on the list. This is the first class that kicks off the actual DTS seminar program that I teach every 6 to 8 weeks. And I don't want to disappoint. You probably are going to guess that you're not going to learn to trade at this half-day event, but this is the important preparation for the other classes to understand what we should be looking at, some things not to be looking at, and I think it's a great overall class that needs to be understood before you can go on to successfully trade or invest for yourself. Here's the daily chart of MTG, and it's going to show you the gap here. This is the day that it gapped, and in this particular case it cleared this consolidation. You have to be very careful because there is a very fine line between this gap, which I just thought was a good gap, and one that looks very similar but yet will almost always fall. We call that the whack-a-mole gap because no matter how much it tries, it keeps getting beaten back down into that base because it is a downtrending base. This one was a little different. It has some characteristics that even had me watching it first thing in the morning. Here's a 15-minute chart that gives you a little better view for the day of exactly what happened. My two entries were just 15 minutes after the open when it dropped like that. And that's the aggressive entry because you're never 100% sure if these are going to hold. And then the second one, I didn't plan on replaying this necessarily, but that second play is one of the most beautiful charts I've seen. It's one of those you want to clip out and paste it on the wall because it's just a beautiful example of one of the most reliable strategies that I know. Here's the 5-minute chart giving you a little better detail. So on the initial drop, I had entry number 1, which was 1185 by 1169. Nothing really fancy on that entry. I did want to make sure that the stock was going to have a chance to move higher, so it was not one of those super aggressive entries. It was more on a confirmation basis that I took that. And luckily it did run, and I grabbed one target on the widest bar in the chart after breaking the high of the day at 1207. Target number 2 did a pretty good job just getting right off that high. I mean, that is just pennies off the high. And number 3, the idea was to hold to the end of the day, but I eventually set up a trail and got out for a smaller profit on the third target. Both plays were about equally split on the profit. I then put the stock off to the side and didn't necessarily think I'd be looking at it again. I keep charts on thumbnails, so I'm looking at a lot of them and looking to see if any interesting pattern sets up. Well, in the afternoon, 5-minute chart, big green bar pops up, and that, of course, is not an entry. I would consider that to be a bad entry. If somebody took that, I'd consider that to be lucky because there's no way to know the stock is going to hold on that initial pop. But what was interesting was after the pop, you get this consolidation, and that consolidation was beautiful, and playing above that consolidation is one of the rare times I actually like to play a consolidation based on a consolidation, at least on a clean first entry. Entry 1203, stop 1191. And here are two targets. One is it kind of dojied into the high of the day at 1215. And then the second one, the goal was to hold to the end of the day, but at about a quarter to closing, 15 minutes to closing, I got a wide bar and trailed it very close to there. So overall, very nice play over 2 times. What I'd like to remind you about if you're curious about day trading, never ever quit your job to become a day trader. Not until you have proven that you can make the money to replace your income. I'd like you to go to my homepage at disciplinedtradingstrategies.com and scroll down and read the warning that's down there. I think is an important concept everybody should understand. If you do want to become a day trader, the thing to do is to start to find a morning or two every week where you can jump in and start to learn this and get practice, make a little income, even if it's 1 day a week. That's the way to do it. And you may think, wow, get a subscription to a trading room for 1 day a week. Well, it is worth it. It's not all that much to subscribe, and it gives you the training, the practice that you need to build the confidence to be able to trade for yourself and eventually get the skill and experience to make more income. So that was my message to you. You can read over the concepts here about the DTS Trading Room. Until next time, this is Paul Lang for Disciplined Trading Strategies. Good trading, everybody.